What's up, people? Today's Monday and we are back with our daily news reviews, and we've prepared some interesting facts and findings from our favorite cryptocurrency world. We will see how things are progressing with Bybit after one of the largest hacks in history. We'll take a look at some information about Bitcoin that raises several questions. We'll also discuss an interesting forecast for Bitcoin's potential as a reserve currency. And of course, we'll also take a look at a bunch of other intriguing facts. If you haven't already, don't forget to subscribe to the channel and hit the notification bell if you like the content. My name is George, and now let's get right into it. First, let's look at how things developed for the crypto markets over the weekend. The price of Bitcoin managed to stay relatively calm on Saturday and Sunday, but when Monday came, it seems that sellers were able to prevail once again, causing a slight drop to below $96,000, where Bitcoin is currently trading. This represents a loss of about 0.2% in the last 24 hours, which is nothing serious or significant. However, the situation is far from being the same with altcoins, which, as you can see from the heat map on your screen, have suffered much more serious losses over the past 24 hours. Ethereum, Ripple, BNB, Sui, Stellar, Cardano, and many others are down between 3 and 5%, while Solana and Link are down nearly 7% for the same period. This, once again, highlights how much weaker the altcoin market has been in recent weeks and how even small fluctuations in Bitcoin's price can lead to much more significant declines in altcoins. Liquidations during this period amount to around $223 million, which isn't huge, but it's an increase compared to the previous period. Interestingly enough, however, the highest number of liquidations was for Ethereum and Solana positions and not for Bitcoin, at least not in the last 24 hours. Market sentiment remains neutral, which is somewhat surprising as I was personally expecting it to be more fearful. Now, for the more serious news. First and foremost, Bybit is recovering its positions after the massive attack by the Lazarus hacker group. CEO Ben Zhao stated that the exchange has managed to recover the 1.4 billion in ETH that was stolen and will soon publish an updated audited report for proof of reserves, demonstrating a 1-to-1 ratio through a Merkle tree. According to Look on Chain, between February 22nd and 23rd, Bybit was able to purchase ETH worth $742 million through loans, deposits from large investors, and purchases, with a total of almost 450,000 ETH, representing nearly 88% of the stolen funds. One associated wallet, for example, bought close to 160,000 ETH worth close to $450 million from Galaxy Digital, FalconX, and Wintermute. Hacken auditors confirmed that the exchange's reserves exceed its liabilities and total assets have reached $10.9 billion. Quite a strong recovery, I would say, to such a massive hack. Next, sometime I believe many people do not suspect. According to research by 10x Research, only 44% of purchases of the American spot Bitcoin ETFs are aimed at long-term holding of the asset, while the remaining 56% are used for arbitrage trades. Since their launch in January last year, the ETFs have attracted around 39 billion in net inflows, while the true long-term investments amounting to 17.5 billion. This shows that the demand for Bitcoin as a long-term asset is much lower than what's generally assumed. Traders are using the carry trade strategy, which means buying spot Bitcoin while simultaneously betting against futures contracts, profiting from the price difference. The analysis highlights the short-term nature of a significant portion of the activity. Of course, this can also be viewed as a positive, underlying the fact that despite the industry's growth, we are still relatively early in the cycle of Bitcoin's adoption as a long-term store of value. In the meantime, speaking of ETFs, it should be noted that over the last 9 out of 11 days, investors have withdrawn more money from these products than they have invested, raising doubts about whether the market euphoria is already over, at least for now. Analysts point out that the dominant role of short-term arbitrage strategies and fixed profits from investors may lead to a temporary correction in market sentiment. Reduced fund flows indicate that the optimism that dominated during the last boom might be cooling off. On the other hand, the drop creates opportunities for long-term investors who see lower prices as a chance to enter the market. However, there is still uncertainty as to whether this downturn is just a short-term reaction or a signal for a more prolonged slowdown in market euphoria. This brings us to the next story, with asset management company VanEck claiming that the creation of a Bitcoin reserve in the US could offset up to $21 trillion of US national debt by 2049. According to the company's analysis, Bitcoin's limited supply and growing institutional adoption positions it to become a leading reserve asset that could provide an alternative to traditional assets such as gold and fiat currencies. Such a scenario could reduce economic risks associated with high national debt and contribute to long-term financial stability. VanEck also emphasized that if the necessary market conditions are met, Bitcoin could play a key role in mitigating the effects of growing debts and inflationary pressures. The company is also forecasting a price of $21 million per Bitcoin by 2049, based on an average annual growth rate of 25%. Finally, a concerning story from today. According to a Cyverse report, pig butchering scams have led to losses of over $5.5 billion. These types of fraudulent schemes involve long-term manipulation of victims' trust by creating fake identities and promising high-flying returns. Victims are encouraged to invest in cryptocurrencies or other assets, only for the criminals to gradually siphon away the invested funds, which leaves investors with practically zero chance of recovering their losses. The report highlights the growing complexity and reach of these scams, as well as the urgent need for increased awareness, as well as for enhanced security measures and stricter regulatory controls to prevent such crimes from happening in the future. Well, friends, that's everything for today's Monday update. I hope you enjoyed the video. If you did, please give it a like and subscribe to the channel. It really helps us a lot. Now I'm wishing you a great day and a very successful week ahead.